If you trade the foreign exchange markets, we're coming up to a period which could end up being the big time of the year. Certainly some are expecting wild volatility as we go into and pass through the votes that come through from the UK's EU referendum due on the 23rd of June. What will the 24th of June look like? We're joined now by Stephen Woodcock from PlutusFX, who is an FX trader. You've been in the markets a long while. I don't know how big this event is in terms of your career, but people are talking about it being a one-off.
Yeah, I've seen events. I've been in the market over 30 years now, and I have seen events that have obviously pushed the market around. But as a predetermined event, then this is up there with the biggest. So
what are you doing then as a trader? How are you preparing the ground? What do you do to make sure your exposure is not too extreme?
Well, basically, we've been informing our customers to bear in mind that in June of this year, we've got a referendum that's going to be a big event. We've advised people to going into that event, we would prefer ourselves to be sort of less exposed to any kind of volatility and gaps, and because the market can behave extremely strangely in these situations. But we've generally said to people, look, as professionals, we tend to be as flat as we can in this. We'd advise you to do so, and luckily enough, most people who we've spoken to have taken that on board, and we are positioned. We're quite lightly positioned, and what we have is quite well hedged. And but you're never hedged enough, because what do you there is so it could go way out the realms of possibility tomorrow, so there's no telling that are you hedged enough. But what I would say is I'm comfortable with what we've got. I'm looking at my customers' accounts thinking, yeah, they look okay. Hopefully there's no danger to their funds, obviously, but they're not going to get wiped out or anything like that.
The headlines that have developed over the last few days, including the George Soros comment about the potential 20% downside for sterling. We had Nick Parsons in the seat where you are from National Australia Bank a couple of weeks ago talking about that scenario, but he was then saying sterling is going to snap back. You have been here before talking to us about the fact that you always felt that sterling wanted to be higher than where it is at the moment.
Even prior to this weekend, obviously, when we've had the relief rally in sterling back up to 147.5, sterling, even when it was sort of getting sold down at the 141 area, it didn't feel like it wanted to go. And if you look at if you broke that down into hourly chart, you'd see there were about 3 or 4 spikes down there, which chart-wise is indicative of an exhaustive low. And but it didn't have that gut feel. Sterling didn't feel to me like, yeah, this is going lower. Because believe me, when sterling, it's probably the more indicative one out of all the crosses, that when it wants to go, you just know it's going to go. That's what it feels like. Whereas some of the other currencies can be a bit confusing, but sterling, when it goes, it generally does, and you feel that. But I just say, I think it sat well around 140. I've been saying to people, what I think is I do think the Bank of England have been buying it, because I think we wouldn't want to go into tomorrow with sterling at 133, 135, because then 130 does come into play, okay? Whether it be just as a knee-jerk reaction, or whether somebody wants to try and see if there are stops around. Whereas if we go into it now where we are, this is quite a comfortable area, really. 147, doesn't look bad. Sterling, the chart doesn't look too bad. Listen, it is going to be probably mayhem tomorrow. Overnight, it's going to be interesting, because probably a few of the banks are going to be staffed, with more people this evening. Tomorrow evening. And, so there is overnight, there's going to be some movement overnight, and obviously the market is thinner, and, so there's a lot of things to take into account. But I do think sterling, no one's spoken about the upside. No. Everyone said it's going to 130 and below. No one said it's going higher. And to me, that's a danger signal. Okay.
What about sterling euro? I mean, this is clearly where the big relationship exists and potential could well break.
Yeah.
What about sterling euro? We've done it the same way, so we got the chart showing sterling against the euro.
Yeah, we're currently 130-ish, if you look at that chart, if tomorrow wasn't happening, that actually looks quite a well bid chart at the moment. It doesn't look like it wants to go lower, does it? Yeah. So if you think that the technicals at the moment are supporting it. Now bear in mind, we are all right. Everything tomorrow is on the vote, so you can throw that chart away tomorrow, or over the voting period. But at the moment, you know, cable, sterling, euro, they look okay. The low we've seen, I think that previous low over there was 123.20. You know, we've been towards, I think, 125 again, and you know, but it's holding up down there. And for me personally, I'm of the thought that, you know, if there is an outvote, it affects the euro as much as it affects us. I won't say more or less, but it affects the euro more, and the euro area becomes a weaker place, and it already is in a weak place. So, you know, we've just had the OMT, you know, the ECB's bond buying program, you know, sort of put through. Sort of, they've been giving, they've called it a half green light, you know, because Draghi has promised that they'll do anything to keep the euro and look after it, and you know.
But does an exit vote put extraordinary pressure on the euro? You again, talking to us before, have been about your expectations for a far lower euro from where we are at the moment against the US dollar. Does this cause an existential threat to the euro, do you think?
Yeah, I think it does. Yeah, I think everyone's concentrated on sterling, saying that, yeah, this is happening in sterling. But for me, it's a lot to do with where the euro is going, and what, you know, we've got parties in France and Germany. If we, you know, decide to come out, then they're looking for referendums in those centres as well. So, you know, that's what we're looking at as well. There's a far bigger, you know, event going on, and the you know, what can happen afterwards? Who knows? You know, it really could be a game changer.
What about some areas of safety where you think there's some protection in the FX markets?
I mean, you know, gold has rallied off from its recent lows. We've rallied, you know, $100, $120. We've slightly eased off another $35 since then. But we've had some yen buying. We've had Canadian buying. The thing is, we've had Canadian buying, but tied in with, because the Canadian dollar's being pushed around with oil at the moment still. But there has been safe haven buying with Canadian dollar, especially the yen. You know, these are currencies that have taken over the Swissy mantle. I actually did see 2 days ago, I was watching someone on TV saying that, you know, people are going to be buying Swiss francs and stuff. I've got to admit, like I say, I've been in the market for a long time. Personally, at the moment, after what happened with the SMB debacle, obviously a couple of years ago, I think people are going to be staying away from the Swiss franc because of the way that that event was managed. And I think you aren't getting people being involved, because the Swissy always, you know, throughout, you know, my career has been the go-to safe haven currency. But I think what's happened now is, you know, with the way that whole event occurred, and well, you know, we saw companies go under on the back of misaction. And mispricing, and you know, the whole thing was ridiculous. But I don't think the Swissy is going to be as heavily bought as people are sort of, you know, thinking, because a lot of people, including myself, and I'm a Swiss trader. That's what I've been for 20 years, and I'm not involved in it because. It's okay if you're sitting in a bank and you've got a big book behind you and you can take some pain, but the general market isn't going to be, you know, Swissy favourable.
Yeah. One final question, just taking us back to where we started, talking about sterling against the US dollar. If it is a vote to remain and everybody breathes a sigh of relief, how high is sterling going to go? Because I mean, that's the opposite trade, isn't it? That
yeah, but I see same again. I'm you know, we're all getting oh right. So if we come out, sterling goes lower, and if we stay in. It goes up. Now, I know that is the general view, and you know, I do like to look at the other side of it. Who's to say sterling's going up if we remain? Why?
And if it does, it'll come back to where we are at the moment.
I'd say, you know, I think sterling fair value at the moment is probably about. I think it should be a bit higher. I think it should be about 155 sterling, which is probably. But we're only 8 cents off of that, you know, in cable, and we're above 130 sterling euro. You know, and we've been down to sterling yen went down to something like 145-ish, 143. We're currently back above that. We're 153 now. You know, and you know, sterling's, like I say, holding up. But I don't, you know, everyone's saying, oh right, so if we stay in, sterling's going to rally. Is it? Yeah. Why? I'm still not. You know, everyone's got so tied up with that fault that's, you know, sterling has been sold off because the closer we're coming to the referendum. We may have been getting sold off, you know, purely on market forces due to the charts, or, you know, there are a lot of things to be taken into account. And I think, you know, if you're being quite blinkered, if you're saying, oh, right, if we stay in, sterling's going up. Okay. Now, sure, there will probably be a knee-jerk reaction, but the day after, next week, you know, who knows where we're going to go? You then revert back to your charts, you know, taking everything else, what's going on, you know, data out of the US. You've got to have a whole wide-ranging, you know, view at the moment, rather than, oh, right, in, up, out, down. It's not that simple, because if it was, I wouldn't be sitting here now. Yeah,
be a machine.
Exactly.
Okay, Stephen, thanks so much indeed there for joining us. Stephen Woodcock there from PlutusFX with a look at the possibilities out of Thursday's referendum.